Brent-WTI. Did I mention Brent-WTI? Why do we call it Brent-WTI? Why do most traders say Brent-WTI instead of Brent-WTI?
It's too long.
It's too long and we're lazy. That is the only answer. I want to trade the spread of the Brent-WTI, please, on the ICE. No, if you're one of the cool kids, you trade the Brent-WTI, right? So the Brent-WTI, the classic Brent-WTI, is simply the futures to futures spread. Buy futures on Brent, sell futures on WTI, for example. Because in the past, we used to ship oil from the North Sea to the US. So that creates a price exposure. Dated Brent price in the North Sea versus WTI prices delivered into the US market. Well, we don't do that anymore, do we? We don't ship oil from the North Sea to the US. So do people still trade Brent-WTI? Why? But oil doesn't go from the North Sea to the US anymore. It goes the other way. So the same risk exists, just crossed the other way. So you're still hedging. So that's still an important arbitrage speculative tool. What happened to Brent-WTI in 2012? Collapsed. Up until about 2012, what was the spread between Brent and WTI? A couple of bucks. Yeah. Brent and WTI are similar qualities, correct? Close enough, right? At least in terms of density and sulfur. The yields are slightly different, but they're close. If oil needs to go from the North Sea to America, that means that the North Sea has to be cheaper than the American market, right? Otherwise it doesn't make economic sense. So if freight's about $2, if WTI, if the market delivered into the US is $100, that implies that Brent has to be 98, $2 below. So for a long, long time, that was more or less the relationship. What happened in 2012? Shale oil. All right, this is where my incredible artistic skills come into play. That's a tooth. No, that's the United States. I know. All right, I'll draw the Florida Keys. All right, so here's the Gulf Coast. This is Canada, right? Mexico, whatever. So the U.S. used to import lots and lots of crude oil. West African crude oil, North African crude oil, North Sea crude oil, Venezuelan, Middle Eastern, all kinds of grades. It would come into Louisiana, Houston, wherever, and would be pumped north. In a place called Cushing, Oklahoma, lots and lots of storage. This is the delivery point for WTI. So we're pumping crude oil from imports up pipelines. We're producing in Texas and delivering it to Cushing. We're producing from Louisiana, delivering it to Cushing. From Cushing, we pump up to Chicago, Detroit, Milwaukee, refineries up here, up into the Dakotas, Chicago, up into, over to Denver, whatever. All the refineries up in this area. Giant sucking machine pumping north. All right, shale oil comes along. Where do we start shale oil, basically? North Dakota, Bakken. You've heard of Bakken? So up here. Canadian oil sands. How many people live in Canada?
20 million?
Oh, please, like 48 people plus some bears, right? So, who's the biggest supplier of crude oil, the biggest single country as a supplier of crude oil to the US? Canada. Very little demand in Canada, lots of oil. So where is it going to go? If you're Canadian, where are you going to sell it? To the US. Okay. Well, do you immediately ship it by airplane all the way down to the Gulf Coast and export it? No, that's stupid. You saturate the market here. Now you've got all this shale oil in North Dakota. How many people live in the Dakotas? About half as many as live in Canada. It's like 12 people in Dakota. It's empty. If you've ever been there, there's nobody there, right? So what do they do with their oil? Oh, we'll sell it to Canada. No, they don't want it. So they're going to saturate the markets. And then Texas starts developing all of their shale. What are they going to do with it? They're not allowed to export it. it's illegal to export crude oil. So they start shipping it to Cushing, Oklahoma. The entire US system is designed to go from south to north. The pipelines, who's an engineer? Anyone? If you know anything about pipes and pumps, how easy is it to switch a pipeline and make it go the other way? No, not. Very hard. So all the pipelines are designed to go this way. It's not so easy to turn them around to get oil out. On top of that, if you get oil down here, what are you going to do with it? You're not going to export it. Put it on, store it. Put it on a ship and sail it to a refinery here? Okay, maybe a little bit. Are you going to sell it to the giant Gulf Coast refineries? Are they going to buy Bakken or WTI Midland or Canadian? No. Why not? What are they importing?
Saudi Arabian,
Venezuelan, Mexican. What kind of crude is that? Heavy sour. These refineries are designed to destroy sulfur and destroy giant molecules. You can run Minas, Tapas, Saharan blend in one of these refineries, Shell Pascagoula or whatever it is. It'll work, but not very well. Your yields will be terrible, the efficiency. They're designed to destroy crappy crude. They have giant cokers and all kinds of desulfurization. So they don't want to buy this light sweet stuff. So where does this light sweet stuff end up? In Cushing, Oklahoma. Piling up in Cushing. And if you go back and if you can find the historical data on the amount of storage in Cushing, Oklahoma, both the amount of physical storage tanks as well as the oil sitting in there, you know, they just start building tanks and filling them up. Oil is going this way, oil is going this way, oil is going this way, this way, this way, etc., all aiming for Cushing. Do you want to go and buy oil in Cushing? There's always a price, right? If you can get the oil from Cushing down to the Gulf Coast, maybe you can convince a refinery on the Gulf Coast to take it. Maybe you can ship it up to a refinery in the East Coast that's more interested in running lighter, sweeter crudes. But the question is, how do you get it from Cushing to the Gulf Coast if there's no pipeline? Trucks, trains, barges. How expensive is that? The answer is $30, $40 a barrel. Once you get the crude oil to the Gulf Coast on the water, it is now more or less equivalent to Brent, right? So, if Brent is $98, how much does it cost to ship Brent to Houston? $2, let's say. So Brent over here is 100. Louisiana light sweet, an offshore grade here, is $100. So if you could get your Midland or if you could get your Bakken onto the water here, it would be worth $100. Okay. So you would say, well, Brent-WTI is the same. It's still $2. 98 for Brent. Ship it over here. It's worth 100. But is that the price point for WTI? Where's the WTI price set? Cushing, Oklahoma. And how far away is that in terms of price? At one point, it was $40 away because the marginal cost of moving oil from here to here was $40. Well, if you could sell oil here at 100 and it cost you $40 to bring it to the market, how much would you pay for it here? 60. So what happened to the Brent-WTI spread? It went from +2 to -40. Okay, you're a Venezuelan or a Mexican, well, let's take Venezuela and Brazil. Brazil is even better. You're a Brazilian exporter. So you're selling to the US and you have a term contract or you're selling spot, whatever, at WTI plus $1 delivered. If you don't sell at WTI plus $1, maybe you could sell your crude oil to Europe at Brent plus 3. Equivalent freight, equivalent price, whatever. So you're looking at the market and you say, well, if I sell it into Europe, I can sell it Brent plus 3, that's $101. If I deliver my crude over here, that's $101 delivered to Europe. If I sell it into the US, I'm selling it at WTI plus $1. How much is that now? 61. Are you happy as a Brazilian or Venezuelan or whoever? Or West African? Not so happy. So what are you going to ask for? Well, the U.S. refiner might say, well, I still want to buy in WTI. Well, in that case, you're going to have to pay me WTI plus $51 premium. Well, are they going to accept that? No, because what if someone reverses a pipeline? Then what happens? Suddenly Cushing empties, drains out, and WTI recovers. So they don't want to commit to this gigantic premium. So what happens to the pricing for Brazilian crude? It goes to Brent. And this is what the big shift was in pricing. This is why WTI became almost purely domestic for a lot of contracts, just the U.S. domestic market. Still some Mexican stuff, but mainly U.S. domestic. Because it was disconnected from the market. It was no longer an international crude. And this is why the Brent, if you look back and you see the Brent-WTI differential, WTI, Brent, whoops, boom. Where is it now? -6, -7 still? And that represents the cost of getting oil from back in Midlands, Canada, down to the coast and delivering it into the market. That is the delivery point is Cushing, which is $6 or $7 away from the international market. That's why WTI is cheaper. Not that the quality's gotten worse, not that back in or Canadian or Midland is worse than the old WTI. It's a lot better. But it's just the cost of getting it to the market is now higher, so its origin price is lower. Its FOB price, Cushing, or whatever the equivalent is measured.